Hello and welcome. My name is Luke Stokes. I'm the Managing Director for the Foundation for Interwallet Operability. I'm super excited to be joined by Stephen, the COO of Bittrex Global. And I'm going to let him give an introduction to himself. Happy to have this conversation. But real quick, I'll give kind of an intro to myself. I always love to start with kind of like, how did you get into crypto and when did you get into crypto? Myself, I have a background in computer science. I ran a company called Cart, which was an e-commerce shopping cart company that my business partner and I built and worked on together for about 10 years. And around 2013, actually it was January 2013, I made my first Bitcoin purchase. I spent about $50 to buy some of that fake internet money, and I got 2.5 Bitcoin. So it's a pretty good deal. Worked out well. And I've just been fascinated with the space ever since. So we're coming up on, oh man, almost 8 years now. And through that process with my shopping cart company with Cart, I was encouraging people to get integrated and start using Bitcoin as a currency on their shopping cart. And so I was trying to get people to do that. There's actually I think still a Bitcoin wiki entry for Cart. And through that process, learned a whole lot about usability and Bitcoin and all that I'd love to get into. But that's a brief background for me. I'm currently, as I said, the managing director. I've also been working with EOS Stack, which is a block producer on the EOS network. It helped launch the EOS network. And I've also been a block producer on the Steam, now the Hive network as well. And I've been a consultant for various projects since I sold my business in 2018. So Stephen, why don't you go ahead and introduce yourself?
Okay, so Stephen Stonberg. I'm the COO and the CFO of Bittrex Global, which, for those of you who don't know, is the international part of Bittrex. So all of the non-US customers, and we split the business over a year ago. We have most of our clients are actually not in the US for Bittrex in general, and it didn't make sense. We want to be regulated, but the US isn't known for its sort of consistent and open-minded crypto regulation. So obviously we still do operate there and very much in compliance with regulations, and we're very big into regulation. I think not every exchange is. We're in the kind of, I lump it into two camps. We're definitely in the we are regulated camp, but we chose to, for our non-US clients, to put the business in Liechtenstein, which is, if you don't know, it's a little country between Switzerland and Austria, which is part of the European Economic Area. It's AAA rated like Switzerland. They use Swiss franc, but it's EU for banking and everything else. And they've passed a blockchain act, which we're in the process of registering the company under. So once it's finished, we'll be supervised under our license with the FMA, which is the bank regulator. And then we've also just set up another exchange, a sister company in Bermuda, where we have a full digital assets business license. Again, that's under the BMA, which is the Bermuda Monetary Authority, which is the bank regulator. It's also the insurance regulator, which is the main industry in Bermuda. And the reason we chose that, again, is outside of the US, it's clean, very regulated jurisdiction. But unlike in Europe, where there's still not clarity, there's much more clarity versus the US between a utility token and a security token. It's still really not practical to trade securities tokens in Europe, mainly because equities are very, until they figure out how to get the clearinghouses and everybody else on board, it's not really possible. So we can do it in Bermuda. So we moved the trading to Bermuda. We're now offering securities token trading, tokenized Tesla 24/7 on Bittrex Global.
Wow, that's exciting. So so when you say Tesla, you're talking about normal securities that normal no coiner, non-blockchain people are interested in owning a portion of, and they can now participate in your exchange
as a token. So wow. We listed the FTX token. So FTX is issued, it's like an ETF. They issued a derivative. So they've issued a token whose value is linked to the value of Tesla or the value of Apple. How they've hedged that, they've obviously got to deal with an old-fashioned equity broker who has to hold the stock, but then you're not buying the actual stock. You're buying a derivative, just like an ETF, which is not the stock. You're buying something that's based on the value of the stock. So it's the same principle, but you're buying an ERC20 token. It trades. So the token is the token. That's the thing about securities tokens. It's just a token. Like, it's no different than a Bitcoin token. It trades the same way. What's different is how it's viewed by the outside world. So utility token, that's why you want to be a utility token, because it's clearly not a security. But if you are, you have to sell it like a security. And how it's treated by the lawyers and the regulators outside, that's what's complicated. So that's where we've invested so much in regulation and making sure we do KYC and proper KYC, AML and all the users. How are you selling this? What are the restrictions? So it's a lot more. I mean, it's even more regulated than just Bitcoin trading.
Interesting. To me, it's because I've long believed in, again, I've been in the space for a little while. I've long believed that this mass adoption of cryptocurrency, blockchain enabled assets, digital assets, it's just inevitable. I mean, it's the best ledger ever invented. Yep. Money has always been a ledger, whether you go back to tally sticks or stones or, with holes in them or, shells or rocks or whatever. It's always been a mechanism of credits and debits between individuals and communities. And so I look at this and say, well, it's the best ledger ever invented, therefore the best form of money ever invented. And therefore, just as software ate the world, you're going to, blockchains are going to eat the world. It's going to tokenize everything. You're going to have this level of transparency and clarity. When I hear stories about certain stock situations where there's no way to know how much of a certain stock there actually is, it's mind blowing as people look into it and they recognize.
How about the fact it takes, in this day and age, if you've ever wired money, just dollars internationally from a very big bank to another big bank, it takes 3 days to settle. I mean, that's insane. It's 2020.
The people in the middle are making money off of that, with the daily floats and everything. There's so many different pieces to it that are just, the more you poke in. I mean, again, with my previous company, looking at the merchant providers, the acquirers, the gateways, all the different pieces that are taking a cut, and the level of. So I've always kind of thought about it from a user experience perspective, saying, okay, the usability of crypto right now, with high gas fees, long delays in terms of confirmations and things of this nature, but more so the tooling, like long public addresses, super, super complicated and confusing. Every financial interaction I make in the real world starts with a request. I don't just have money randomly show up in my account going, what is this for? It's always, I initiate a request, or a request for payment is initiated to me. And these are kind of the fundamental things that we're doing with the FIO protocol, is to make it human readable addresses, FIO requests, so you can actually request payments, and then include contextual metadata about that transaction. So it can actually be like, oh, this is for lunch, this is for rent, whatever. And so I've always kind of focused on the usability side of things being the big hindrance to this inevitable mass adoption of cryptocurrency, these billions of unbanked users. But you bring up a really interesting point, that it's not just the usability, it's also the regulatory frameworks. It's also the clarity with frankly, the people with the guns, the governments, the monopolies on the use of force in a geographic region. They have a huge role to play, and how we as individuals and more so corporations and companies that want to invest in this asset class, and how we're able to interact in that environment. And so it's interesting how much work you guys have had to do to position yourself in a way that everybody can just show up and say, okay, this makes sense, and the regulators are happy, and my accountant side of the books will be happy. The treasurer of the company is going to be okay with it, that kind of stuff.
Well, so I think you've said some really interesting things. I think we should pick it apart for a second just before we move on. So I think if you look at the traditional world, and then there's blockchain. And I think, as you pointed out, blockchain is so much, it's an amazing settlement system. It's really what it is. It's a way to settle assets. And that's all that a token is. It's this but like you say, it's not the most user-friendly. It's kind of like when computers came out and you had to type your own code. If you're way too young to remember. But then eventually, you don't have to know how to, Apple figures it out and makes it clean and really cool. And I think that's kind of the analogy I'd use for what you're doing to the blockchain. The technology is great, and it's so much far superior to the old-fashioned world, but it needs to be made more user-friendly. But irrespective of that, these are still assets, as you pointed out. And an asset, it doesn't matter if it settles on a blockchain or it settles, through Euroclear, if it's an old-fashioned stock, or through a bank wire. It's all regulated. I think the problem in the crypto world is that a lot of the players don't think that they're trading at. They think because it's crypto, the way they settle it is different. That it's not an asset. Those, money laundering doesn't apply to me, and I think that's not going to end well for them. But and I think you're already going to see that with the convergence of now the JP Morgans and everyone's adopting it. But as you aptly pointed out, the Euroclear and all these inefficient stock settlement systems and bank wires, why haven't they ever fixed it? Because why should they? They make a lot of money out of it. So this is the Amazon moment for the financial services industry. Blockchain's here, and forget it's not about fintech chipping away. This is huge game changer for them. And now they're just dipping their toe and maybe we'll trade Bitcoin. But I think you pointed on something fundamentally profound. And again, I should have mentioned, I got into crypto 2.5, almost 3 years ago, which was still early for like an old dinosaur like me who was in financial services to jump in. And even now, people now they're all interested. They don't know why. They just know it's the next hot thing. They don't know what it is, but which I'm always a bit sort of cynical. But I think I just like JP Morgan, who hated it and thought we were all like drug users, using crypto. And now they JP Morgan just issued a report. Not only are they doing crypto, Bitcoin's going to replace gold as a store of value.
My favorite discussion point on that is like Jamie Dimon literally saying, if you work for me and you own Bitcoin, I'm going to fire you, right? He's saying all these things, right? But you never look at what they say. You go look at what they're doing. And meanwhile, they had, I think it was over 90 failed patent requests to patent their own blockchain cryptocurrency.
How about their London office? While he said that, his own London trading team was one of the largest participants in the Bitcoin market. So clearly, either he's a completely uninformed CEO or he's outrageously political and just saying things to talk his own book, or whatever position he thought he wanted to take. Who knows?
And to me, this is the reason I got into blockchain and cryptocurrency, because you can't have a separate set of books that, like Enron is keeping over here that they're cooking in order to defraud a bunch of people. It's all clear. What backs a Bitcoin? It's or any cryptocurrency. It's the layer, I call it layer 0 security of the community that believes in it. So it's pure price discovery. I mean, when we look at the stock prices today, especially in the United States, where you have this level of unemployment and economic activity doesn't justify those prices. So there's already a level of belief speculation that is completely disconnected from. Which
is why, just to interrupt, but that's why I think Bitcoin's hitting all-time highs. It's a lack of trust in traditional financial assets. This
Absolutely.
is a limited supply asset. There's complete transparency. And I think at a time when there's never been more distrust in government and social media and in the media in general, and just, and I throw in these throwaway comments from these bankers, like, who you don't know what to believe anymore. And I think there's definitely no faith in the banking. That's since 2008, the last crisis. So I think this is really an interesting fundamental watershed moment. I think it's highly exciting, which is what drove me into this. But I think you can't opt out and say, well, just because it's a new technology, we're not regulated. Like, no, there's still the rules, but it's a complicated thing to figure out. So you were asking me, how did we solve this? So we wanted to do securities tokens. Where could we do this on planet Earth at this moment in time? And, that's why we're in Liechtenstein. It's in Europe, it's AAA rated country. It's basically, it's like the Swiss version of Monaco. Like, it's not part of Switzerland, but it's sort of, it uses the Swiss franc, but it's an independent country. I mean, it's tiny. It's like 40,000 people, but they joined the EEA. So then for banking, it's EU passporting. And they passed a blockchain act. So you can be in a place where it's an 1.5-hour drive from Zurich airport, highly educated workforce, extremely clean. They already have an existing financial services infrastructure. And then it's super crypto friendly, and there's banks, not just in Liechtenstein, but you drive an hour and you're in Zurich, in one of the banking capitals of Europe. So that to us was kind of a no-brainer. And we looked at Switzerland as well, which is also a very good place to do crypto, but then it's a 6 million person market. So if you're looking at doing securities, who care? It's even in like the traditional markets, it's so small, no one really cares. You want to have EU passporting. So we thought we kind of got the best of both in Liechtenstein. And then with Bermuda, we wanted a place to do securities tokens. Liechtenstein, you can do it in principle. There's nothing stopping you, except practically Europe hasn't solved the problem of trading digital securities. So how do you're not going to solve that from Liechtenstein. Deutsche Börse can't even fight that battle. So like, we wish the big players can fight that out, but where can you go? And Bermuda has very clean, it's I guess offshore, but I'd say that's one of the cleanest places. It's not on any blacklist, and the world's reinsurance industry is there. I mean, the real companies operate there. Chubb, Ace. I mean, that is where most reinsurance on planet Earth goes through. So that's like already a legitimate jurisdiction. There's people there. There's offices, companies, and the regulator is quite a serious regulator. So they pass legislation, and they don't distinguish between a security token and a utility token. A token is just a token. So you have to obviously be properly licensed. We have an office there. We have a chief compliance officer in Liechtenstein. We have one in Bermuda. We have staff. We're growing. So, it's compliance heavy. But assuming you can do all of that, then we found that that's the best place to trade those tokens right at this moment in time. And who knows in a year from now, maybe you can do it in Europe. But the world can't wait. We want to be regulated. We want to be innovative. So it's like solving this complex problem with so many moving parts and variables, and like it just keeps changing. So you just have to find a spot that seems to work. That's how we sort of are doing what we're doing.
It's amazing the level of basically like resources, time, and energy that you have to commit to something that's not necessarily like your core business, right? Like all the legal stuff, all the regulatory stuff, it's like you have to be informed about that. You have to prepare for that. You have to, spend the money on, getting all that filings and all those things happening. But ultimately, you're not, changing your product, right? Like making your
No,
product easier to use, engaging more people to use
it's a
the product.
token. I mean, it's a utility. It looks like a utility token. It smells like what? It's just called something else. So the regulatory framework, it's like all the things the client. But so if you become a client, or if you're a Bittrex Global client already, you onboard to Liechtenstein. If you want to trade stocks, and we do it based on what country you're in, and you have to sign another terms of service. But once you've done that, it's just another token on your account. It's just the only thing that's different is some of the legal wording and how the process around which we've sold that to you. But that's the whole point. We've tried to take something super complicated, but make it ease of use. But to do that, we have to have multiple countries. This is all the stuff that goes on behind. You don't. Now, once you've signed your terms of service, you don't care if it's in Bermuda or in
and
wherever. It's just that you just know the exchange that you're dealing with isn't going to go to prison. You've done nothing. We haven't violated securities law. That's what we won't do. So we are very respectful of the rules, but we'll try to find a clever way that it's a win-win for the clients and the regulator and everybody involved.
You mentioned earlier, these two camps in a sense, a group that's focused on being regulatory compliant, and then, I'll just go and say the DeFi, degen group, which is just like, hey, it's a smart contract, try to shut us down. We don't care. The interface is on, some globally shared database, so anyone can access the interface, and good luck trying to stop us. And so I think it's going to be really interesting as you guys are kind of like leading the charge to make this accessible to the people who are not comfortable with this kind of Wild West. But I built my first websites in '96, and I've been a programmer for a long time. And I've seen kind of the AOL kind of sheltered walled garden silo approach, where people are kind of like, all right, the internet's kind of scary, but I'll get this free CD and I'll use my modem that I just bought, and I'll dial up and connect to the scary internet place where all the thieves and murderers are, and people are doing all these illegal things, right? It's the same narrative that it's always been. If they, until they can control it or have some stake there, then they're like, yeah, I'm not so sure. And then eventually, you click that little globe button, what's this? And you click on it in the AOL interface, and you're like, whoa, the World Wide Web. And, it's hard and confusing. You have to have all these indexes, because they're different search engines that weren't very good. But ultimately, it's this kind of getting people on board, right? Getting them something they're comfortable with, getting something they're used to, giving them access to what they want, letting the market decide. But I do think eventually, and this is just kind of my personal position today, it may change in the future, but I think eventually you're going to get to this point where it's unstoppable due to the very nature of the technology, its inability to be censored, it's censorship resistance, it's lack of centralized control. I've been involved in DAX and DAOs quite a bit as well for a number of years. And the idea that you can have these governance structures, it's not without regulation, it's just regulation that actually works, right? It's regulation directly on the contracts themselves that people are interacting with. And to me, I think it's very exciting. It's kind of similar to like the internet was around for 10 years, and then HTTP protocol came out. And then all of a sudden you have this usability layer for World Wide Web and web browsers and all that. And it was accessible to people and they could understand it. And that's similar to, like, again, what we're trying to do with FIO is make crypto not so confusing, not this weird like early adopter thing that only tech heads can do, but make it super, super simple, super easy. We have this now shared protocol that, we would love Bittrex Global to join as well. Just getting the community of exchanges and wallets to think about, how are we helping make our industry better? As a nonprofit Cayman entity, we're focused on having this shared understanding of usability between wallets and exchanges. We've even talked about how potentially at some point, if this becomes, this again becomes a larger part of the discussion, the travel rule, for example, is when we're talking about regulatory compliance. And there are organizations that I've talked to that are like, we've got basically just a few months here, for like in Singapore and other places to get these things done, or we might lose our licenses.
Exactly.
And so it's a very real issue. And we're thinking, well, if it's going to be done, I'm personally not a fan of that level of KYC and having to give up your privacy at that level. But if it's going to be done, I'd, I guess, prefer it be done on a decentralized platform. So it's then two individuals sharing information as opposed to a centralized data store where it becomes a honeypot. And we've seen this again and again in government agencies, centralized exchanges, and beyond. And so I'm kind of interested in, okay, and we've had a number of interesting conversations of, how could the FIO protocol be used similar to like we do FIO requests with that metadata? How could it be used to also manage travel rule information between exchanges and even wallets is becoming more and more of part of the conversation. Meaning if you want to withdraw from exchange, there may be a point in certain jurisdictions where they're pushing this pretty hard, where you're gonna have to validate that you own via KYC processes that address you want to send to, that you own that wallet. And so that's a level of a level of lack of privacy and that's something that the Bitcoin community and the blockchain community hasn't had to deal with in the past. And I think there's going to be these two camps, as you mentioned. One's going to push forward and says, try to stop me. I'm going fully unregulated on DeFi. And another group that's basically still trying to stay relevant, right? I think some of the governments and companies, they're kind of like, wait, we can't not do this. We can't ban Bitcoin from a game theory perspective because it's like banning gold mining. Like you will no longer be part of the world reserve asset of the future. But you can't just pretend, you can't just step by and be like, well, the emperor has no clothes and we have no control and we're just sitting here taking your tax money and we can't do anything about it, right? And so it's going to be very interesting to see how that plays out. But I really do appreciate, again, the people in the industry like yourself who are doing the hard work to say, today, where can we do this in a
exactly? And that's what I think
today?
I was trying to say. So I think there's a huge place for DeFi projects. And I don't have a view. I think, just because of how we're running our exchange isn't our view on all crypto and the whole industry. And I think, we're very supportive. We have a lot of, in fact, we have no trading fees and no gas for DeFi projects right now on Bittrex Global. So we're very supportive of that community. I think at this nanosecond in time, if you're running an exchange, and I'm not just talking about decentralized exchanges versus centralized. I also think within the centralized exchanges, there's some who are adopting the regulations and some who just don't think those apply because they're in crypto. So that it's not a centralized versus decentralized thing. I think it's just, so I think right now at this moment in time, if you want to operate in crypto, it is financial services. And then so I think the world you're describing is the future, because right now, don't forget, everything goes back to fiat. Like you can't really spend crypto in most places. So you always have to go back to fiat, which means you're touching a bank, you're touching a government. So there's no way to escape. Because eventually, how are you going to spend all this money you make in crypto? You have to, unless you can go to the 3 hotels on planet Earth and take Bitcoin at this moment in time. So when the whole world has adopted blockchain and Bitcoin can be, but we're so far away from that, or maybe not, but it's not going to happen for the next 5 years, I think.
Yeah,
so I think
I definitely feel
the next
like
5 years, that's how we've decided to run a crypto. I think if you want to run a crypto exchange, it's going to be centralized, and if you're going to have to comply if you wish to still be in business in a few years. The regulators will catch up to you, and if you're already, all the exchanges are touching fiat, they're touching things that are regulated. They're selling, even if it's a Bitcoin derivative, that is a security, whether they acknowledge it or not. The countries in which they're selling those things too, they're already in violation of probably a lot of rules. It's just the regulators haven't caught up to them yet, and they inevitably will. So I think longer term, the whole world's going to be turned upside down on its head. But even like with the internet, it didn't happen overnight. You remember dial-up modems, and Amazon was a bookstore. That was it. You could buy books, and it was so cool that you could go shopping 24/7 for your book. And then you would still go through your dial-up modem, and but that was considered groundbreaking. And then I don't think anybody envisioned a world where this little device would be eavesdropping on you and telling you your grocery order and like what you should be buying. I don't think anybody could have. But that only took 20 years, and I think now the cycles are going to be much more compressed. So maybe it's 10 years or 5 years. Who knows?
Yeah, I love looking at like a technology adoption cycles like you're talking about, and how they shrink and shrink and shrink over time. The iPhone is a classic example people talk about, and it was a usability solution where it's like, okay, I just press one button, super simple, and that the connection between ease of use and mass adoption is something that I've really been passionate about. That's why I decided to join this project, because it's the idea of saying, okay, we've got billions of people that don't have access to all the regulatory, traditional financial ecosystem that you're describing. And at the same time, we've got, really big hurdles. Like they're not going to spend $50 to $60 on a DeFi transaction in gas fees and then have it fail, which happened to me a couple of weeks ago. And like, that's just not a usable solution. I can't imagine a Charles Schwab person coming to a DeFi and being like, wait, so I paid the fees, but my trade didn't go through? Well, I don't understand, right? Like the level of usability that we have to solve is pretty high. And I was a little bit, I would say, naive and idealistic and very excited 8 years ago, or almost 8 years ago, when I was like, man, this is the future. And I was blogging about it. I was doing interviews about it. I was talking a lot about it. Again, and I ran an e-commerce company with thousands of stores, and I was trying to get them to integrate with that. Back then it was BitPay, and we also did Coinbase a little bit after that. And it was kind of like, they were like, why would I do this? This is just like, it's so complicated. It creates friction for my users. They go to the checkout and I'm seeing like higher cart abandonment rates. And like, they were just saying, why would I add more confusion to the experience? It's just
something that a customer is not, other than a small esoteric bunch of people. And I think it was just, so yes, we all knew it was going to happen, but then it took, like you say, another 8 years, or it took.
Yeah, exactly. And we're, like you said, we're still not there. We're still not there. Like it's still, it surprised me how long it took, even though it's slowly starting to happen, but we're still not like, I don't just go to websites and just see, pay with Bitcoin, pay with USDT. Like, I expected that, but I don't see it yet. And I think part of that too, again, is the usability. Like we have for FIO, we have shop.fioprotocol.io. It's a full checkout experience where you use a FIO request to check out. So it's kind of neat because you can get some swag and stuff. And when you make your payment, you actually send a FIO request to your wallet, and it shows up, it has information about the order, and you just swipe your finger and you're done. And it's like, that was a better experience than, and if it's a digital asset, you're done. You don't need, if it's a shippable asset, obviously you got to give a PO box or some type of shipping address. But it's like, when we can make interacting with crypto, or whether it's digital assets or anything, make it easier, hopefully 5 to 10 times easier than the existing experience, that's a huge, huge win. So another thing I wanted to chat with you about, if it's all right, I was curious from that perspective, the experience right now with crypto and public addresses in particular, and I've talked to a number of other exchanges. I actually heard from one exchange last week, which was shocking. It was about $200,000 over 6 different failed deposit situations, where again, somebody doesn't include the memo, or they send it to the wrong address or something like that. And he talked about how he had to pull off an engineer for 5 hours each instance to work on recovering those funds for the customer, and how that destroyed their sprint for that week for that developer. And how, like, if they don't do it, they get roasted alive on social media, being like, these guys are a scam, they stole my money. And I'm curious, from a there's a unique opportunity to talk to someone at your level at a major exchange. Does Bittrex Global deal with that kind of situation? How do you feel the usability is for your users actually using crypto deposits and withdrawals and things like that?
No, I think we spend most, well, I don't think it's just unique to a crypto exchange. I think financial services businesses, I think, sending bank wires is also fraught with, it always bounces back. It gets lost so I think this is just part of being in a financial services business. I think then with crypto, it's a whole other level, because like you say, the blockchain itself isn't the most user-friendly thing to begin with. And you've got retail investors coming in who, fat fingers, they make a mistake, they're all over the world, and you're running a global financial services business as well. I mean, our customers are in over 100 countries, so with multiple languages. So yes, there's inevitably issues, not necessarily the specific one you've described, but other issues, or the protocol's changed, or we got rid of this token, or it's forked into something else, I can't get my money out, and you're just constantly dealing with it's very time consuming. You need to have a lot of resources for customer support. And like you say, if you don't fix it, they start roasting you. I'm very public, so they send me nasty in-mail messages on LinkedIn. And
oh gosh, I can imagine.
Yeah. Me in this industry, but I think it's interesting because it's very, it's a two-tiered industry. You're dealing with retail and institutions at the same time, which typically you would pick your sort of spot, and you're doing you're doing a global financial services business with institutional retail customers in multiple different types of asset classes overnight. And that never existed before, which is where I think this is exciting and so disruptive to, our great friends at the JP Morgans and Goldman, who are, lovely institutions, but this is their Amazon moment. They kind of got away with, keeping their inefficiencies. And I think, going to what you said, this is really going to be interesting for them. I don't know that they're going to be the winners long term.
Yeah, I look at it also too, like even the credit card. The credit card was invented prior to the internet existing, and it's literally like, here's the keys to my safe, here's the numbers. Please only take out what you're supposed to. Like, it's just, if you were to design that system today in the age of the internet, you'd be like, are you kidding me? You've never heard of public-private key encryption?
They were charge cards. They came out in the 60s. So, yeah. It's like it's like 60-year-old technology, literally.
And so I think, as it's like moving at breakneck speed, the innovations are just amazing. I've heard not just privacy tokens, but even private securitized tokens. I've heard some interesting things there. Obviously, the DeFi movement moving so quickly. Maybe we could talk a little bit about, what does the future look like in 5 to 10 years? I'm thinking that we're probably going to see a lot more interoperability. And I'm not just saying that because that's, one of the letters of our name. I think there's going to be a ton of interoperability, not just, most people focus on the chain level, right? So that's being able to wrap a token, transfer it across the different tokens, even having DeFi contracts and other smart contracts talk to each other. Obviously, oracles are a huge part of that as well. Points of trust that are decentralized in a DAC model so that token holders can elect who has access to update the contracts, for example. All of that I find super interesting. But then also, again, what we're doing at the wallet layer. So really making a usability interoperability. So we actually have, from the usability standpoint, shared experiences. So it's like if I go to one exchange, I go to one wallet, I get this nice user experience that I'm comfortable with. And it doesn't matter what token I'm using or anything like that. And so part of that, I think, is going to be a big challenge for users is as we begin to see, for example, USDT exists on EOS, it exists on Ethereum, it exists on Binance Smart Chain. It's like more and more omni-layer. It's like living this one token on multiple chains. And so when someone, and I've heard about this, they go, oh, I was tweeting back and forth with CZ about this, where it's like they send a token, a Binance Smart Chain token, to an Ethereum address. Well, that's perfectly a valid address to receive that token. But if the exchange is like, we don't support that token, we don't support that chain, what happens now? The user's like, well, can you just refund me my money? It's like, sorry, it doesn't work that way. Like, there's no refund. If we don't have the private key, like, we're done. It's gone forever.
But that's the thing. The asset is now really 5 assets or 6 assets. Each chain is like a sub asset. So they need to, but I think that's where we understand it. We're in the industry, but then you've created such complexity around, something like Tether, which is just a simple, it's $1 basically. So but you've made the settlement of it so complicated, and it's fraught with the ability to lose your funds. I agree.
And this is one of the reasons I'm very excited about the FIO request, and even the FIO mapping. When I take a FIO like Luke at Stokes and I map it to my Ethereum Tether address and my Binance Smart Chain Tether address, which might be different addresses. When someone sends me a FIO request and requests USDT from me, it'll include the chain code and the token code. So it'll actually, and the public address. So it's actually verifying, like, if I don't have an omni-layer USDT, or I don't have, Ethereum USDT or EOS USDT, then my wallet will be like, I can't respond to this. I don't have that token. Whereas that level of understanding is usually not there for most users. And so the more we can abstract away those complexities and say, hey, it doesn't even matter what chain you're using. It's like you and I don't care that we're using SMTP to send an email. We don't care that it's TCP/IP or HTTP. Like, these protocol layers aren't as important as the user experience to just make it easy and simple. And so I'm excited where we're positioned. And again, I hope yourself and others in the industry will have a chance to look into what we're doing, because we are trying to become this decentralized autonomous consortia of industry leaders who share our passion to make all of this easier to use.
Well, it's a complicated, it needs to be solved. I mean, so the problem, so I think there's the proliferation of how you settle these tokens and how the tokens operate. But then I think the other development is, to date, what have we seen in tokens? It's either Bitcoin, Ethereum, which I guess are quasi, a form of an asset themselves. And then you have Tether, which is a securitized dollar. And then you have a bunch of token teams issuing altcoins. So it's like a utility token that represents something to do on their thing. But now we're going to start to see, I think the next big trend is going to be real world assets coming into these tokens. So right now we've just started tokenizing existing stocks. What happens when these token teams also start issuing securities tokens? Like it's like a new form of an IPO. Or you can just take real estate and just tokenize it. You can take a building, and then so you're opening up, then you have the same problem that this building now exists as a token, but then there's all this 50 different ways of, how are you settling it? I mean, just think about it's like such a myriad complex problem with so many different variables and possibilities and outcomes that it's just infinite. So I think it's going to be hugely disruptive, hugely interesting, but unclear which way it's going to go. And then you have all the sort of exogenous macro factors that one doesn't control that are layered on top, which keeps never a dull moment.
Never a dull moment. I was just going to end with this idea. I was thinking about a while back, when Bitcoin was around $20,000, and then it came, and that was in December, and then it went down to like $4,000. And now we're back up as of today, new all-time high, back up over $20,000. And I like to point out to people that not a whole lot changed as far as the actual underlying technology and usability of the experience. What changed was, again, that layer 0 security. And again, I saw this with the Steam and Hive as a block producer there. I saw that the layer of the community that believes in the value of the token, supporting it or not. And it's been really interesting in a lot of these kind of projects, where they might have a token, they might have a community. It's like, how are they representing the value of what they're bringing to the world? And how are people speculating on it? And those are often two separate different things completely, because it's like, if the technology didn't change, but the perceived purchasing power of value changed so significantly, what an interesting time to be alive. And I commend you for being, making that change from the traditional financial industry to see the future and actually recognize, yeah, this is what I need to do. And I kind of made a similar decision in 2018, selling my business after 10 years back to my business partner, to say, I have to be in this industry full time. It's just too exciting. There's too many amazing things going on. And it's certainly something that, I've got 3 kids. It's something I want to be able to tell my kids in the future. Yeah, I was part of that. I didn't just, sit on the sidelines and watch the world change. I actually
didn't wait for it to happen.
Yeah,
happen.
Exactly. Well, how can people reach you? We'll go ahead and close it out there. And again, thank you so much for your time. I really enjoyed the conversation.
Sure. I'm on LinkedIn, Twitter. I have my own social channels, and then I have obviously the company Bittrex Global. You can follow us on LinkedIn, Twitter, all the different different social media platforms. So, and I'm sure we'll give you the link so you can post those with this.
Excellent. Yeah, we'll certainly include that. And myself, again, I'm on Twitter as Luke Stokes, also on Hive as well, Telegram and all of those. And the FIO Protocol, you can reach at fioprotocol.io. A lot of stuff we're talking about there. You can see the ecosystem of wallets and exchanges that have started integrating the protocol, and you can get yourself a free FIO address as well if you want to try it out.
Again, Bittrex.com if you want to trade on Bittrex. So
yes.
Global and Bittrex are both, it's all access through Bittrex.com, Bittrex.com.
Really appreciate your time, Stephen. It's been a wonderful conversation, and I hope we do it again sometime.
Likewise. Really good to meet. Talk to you soon.
Take care.